Hello everyone, my name is Andy. Today is Friday, September 15th. Time is around 6:10 GMT, and we will have a look at the DAX futures on the Owanda platform. So yesterday, as forecasted, we had a we had a move up among the indices. Overall, they all went up as forecasted. Some took out some key levels, so therefore I will immediately combine the higher time frame with the lower time frame because this is necessary to do a good analysis for some of the indices. So here for the DAX, we will start in the weekly, and my take on the DAX is that we did a wave one here to the upside in 5 waves. We end with divergence. The cycle was completed here. Then we moved down corrective as an ABC. We fulfilled the minimum requirements for a wave two down here in the higher degree. We touched the 0.5 fib level, and so from here we went up again, and so this is or could be the the start of a wave three here of the higher degree. This becomes our target area, and so for now my primary scenario is saying that we finished a wave one here to the upside here in the higher degree, and so now we are ready for a pullback as a wave two. So if the high was in here, then if we take the length of our wave one, then we know that our wave two should go here into this area between the 0.5 and the 0.854 fib retracements. Now, if we look at the daily, so here you see my primary count. So I believe the wave one high was in here after 5 waves up, and that I'm now calling for a correction that, in my opinion, is unfolding as a WXY correction. With the data we have now, I would call for a WXY, and there might exist a variant on this scenario, a variant which means or which involves that the wave one high was not in yet, but instead that we have a 3 here and that we are doing a 4 here. Excuse me. So I would say, like, it all depends on this correction in my opinion. Like, if we have a shallow correction, like for instance WXY just taking out this and this low here, then I would tend to label this as a wave 4, as it is only very shallow. However, if we go deeper and especially reach this area and even the lower boundary of this area, then I would go for a wave 2. This might look a bit arbitrary what I'm saying now, but yeah, we will only know the perfect Elliott wave count of this part in a few months. This is the reality. It depends on what we get next. The only thing I'm seeing now is here that this could be finished because we have 5 waves up. We broke this cycle to the downside, which is typical for a wave 4, and we end with divergence. So therefore, I would call for a wave one here completed. However, that does not mean that we can print another low here with divergence. And if this would be the case, then this pullback here could be the 4 instead of a 2. Then we have the 5, and then we are ready for a bigger wave 2 correction. So we just have to see what future data gives us. But for investors, it does not really matter. Like, as an investor on the higher time frame, just like a trader on the lower time frame, you wait for the completion of a correction to buy again. And this move here does not look does not look ready. It looks like we need another leg down to move down in 3, 1, 2, 3. So I would wait as an investor for this area to buy again, or at least taking out this low. But I don't see this happen today. So we have to see again next week if we are approaching this low, how exactly we can buy the pullback. Okay, now let's go to the 4 hour. So here on the 4 hour, here you see the WXY structure. So wave 1 in here, 5 waves, and now a pullback as a WXY. So our target area is the area that we can find by taking the length of wave W, the length of wave X, and then here the area between the 1 and the 1.618 FIB extension is the area where we should go as a wave Y. And like I told you, if we actually, it is enough to take out this low here, this wave W. So depending on do we get a shallow pullback here, or do we get a deep retracement, we have to decide if it will be a wave 2 or a wave 4. But we need more data for this. So here we are moving in a corrective way. Now there also exists a variant, I would say, on this WXY variant, which is indicated here in red, my secondary scenario on the 4 hour. And this scenario would be a scenario where we are making a flat structure here as a correction. So this would mean that we go down in 3 here, 1, 2, 3 as our wave A. That we are now doing some kind of messy wave B. So for the wave B, it would mean that we have to take out this high here, and then this becomes here a messy structure as a wave B. We can get even quite close to this high here, or we can even go beyond the high as an expanded flat. That's also possible. But then once the wave B is in, we should go down in 5 waves, 1, 2, 3, 4, 5, as a wave C. So then if we move to the 1 hour. So my forecast of yesterday turned out my primary forecast here in green. I was expecting more upside. I was expecting to take out this high. I told you not to use this high as a stop loss level. And as you can see, we are now beyond this level. So I will take out my secondary count. This one did not play out. It looked too nice to be true, this secondary count, and you always have to be careful. If it looks too nice, then it's very often a trap engineered by the market makers. And so now we are here in the primary scenario, and so the primary scenario looks like, so we have a wave W down here, wave X up, and then we should have our wave Y down. And so this wave Y is, in my opinion, unfolding as As an ABC, I label it for now. However, if yeah, we have a deeper correction, then this could be your wave 1 of A, your wave 2 of A, and then wave 3 of A. So this is something we have to decide later once we get more data. But so for now, I would say this is an impulse down in 5 waves: 1, 2, 3, 4, 5. And then here we have our flat structure, the trap. Like they give you the impression that we move down, and this was like how my secondary scenario looked. But then you have this extreme reversals to the upside. A lot of people are using this here as a stop loss level. They go here to take the liquidity, and now we could have a move down again. Now the difficulty about this structure we currently have is RSI is not telling us much. Like if you have a straight line like this, your RSI becomes worthless. First of all, here on the 4 hour, the 4 hour RSI for the moment, we cannot read anything here. We do not really have a clear cycle or whatsoever. Also, okay, on the 1 hour, we could say after wave A, B, can we, like this could be 1, 2, but then, we do not really see a 3, a 4, and a 5 right now. So my guess would be that we are still doing the wave 3 actually. So I would expect more more upside. Also, if I look at the other indices, there, especially like the Dow Jones, it looks like it needs to take out a high before it can reverse. So across the board, I would expect again more upside among the indices today. I'm sorry, I'm having a cold. So wave 1, wave 2, wave 3, it does not look like a complete structure for now. Also, if we look at the 15-minute, we start to see some divergence here, but this could still be divergence within the within the wave 3. I'm afraid they will further chase some stop loss levels of traders. For instance, they can also take out this one here, because it looks like everybody would like to short this move up, but this can be dangerous. I would just wait for some signs of exhaustion here. At some point, it has to return, and the problem is I do not really see exhaustion right now. There is something here at the 15-minute, but it does not mean much, I would say. More importantly, here on the 1 hour, the pattern we actually need to see is so we have a wave 1, a wave 2. This is our wave 3 ongoing. Actually, we would need to break this RSI trend line, and then another wave up here. as a wave 5 ending with divergence, and this would be this would be the exhaustion pattern here of our wave C. And so this is what I would wait for if you want to short this structure. For now, yeah, I would expect more some more upside, and yeah, I would like to see some kind of exhaustion pattern before shorting this. Okay, that's my analysis for today. If you enjoyed it, please like, subscribe, comment to support my work, and I see you back on Monday for an analysis of the lower time frame. Have a nice day. Bye bye.